For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next top thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was, and I just followed their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
Just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors.
Well, hello, and good morning to all of you. Welcome. I'm Jeremy Whaley, founder of Trade Maestro. I say good morning. It's good morning to those of you on the West Coast. If you're on the East Coast, you've just crossed over into the afternoon hours, and I hope you're having a wonderful afternoon. We got a lot to get into today because we are launching the Pick Winning Stocks Challenge. This is so exciting. Week 2 of our live stream series, which we've had great response for, and I think we're going to be going live every day forever at this point, as far as I can tell. But for the next 21 days, Monday through Friday, we're not going to do the weekends, but Monday through Friday for the next 3 weeks, what we're going to do is this Pick Winning Stocks Challenge. And if you've ever gone through the challenge before, then you know the first weekend, there's actually no new videos for the first weekend, but the second 2 weekends there are. So I'll have to figure out how we're going to push those out. But we will get you all 21 days of the Pick Winning Stocks Challenge. And if you're not familiar with this, this is a premium course that we've done for years here at Trade Maestro. It's part of our membership. If you're a member at Trade Maestro, you have access to it. But it's kind of the initiation into the Trade Maestro way. This teaches you all of the core foundational ideas of what I teach here at Trade Maestro, and it gets you going. And it's just a fantastic training that we're about to embark on. And so I'm really looking forward to sharing it with you. Now, as part of this series, what we're doing, the way that our format is working is every day we start off and we do a little bit of market analysis. And in the future, when we have more of you that want to interact, I mean, you can do it now. There's no reason you can't interact now, but in the future, we'll also do a pretty extended Q&A is my plan at the end of the live streams. But for now, what we're doing, a little bit of market update, then we'll get into the core teaching. And then, as I said, if you want to do some questions at the end, I'll answer them the best that we can facilitate them. We are live on YouTube. I think we're live on Facebook right now. And I'm kind of excited. We're launching Rumble today for the first time. I have 5 followers on Rumble, and yet somehow it shows that I have 3 of you that are actually watching on Rumble. So that's kind of cool. So welcome if you're over on Rumble. If you're not familiar with Rumble, it's a great platform that really is kind of taken on YouTube in the free speech space, no censorship, and there's all sorts of great benefits to it. So if you're over on Rumble, I think it's the Trade Maestro channel is what it's called, but I'll get those links for you. I also pasted in, let me see if I can repaste it into the chat here over on YouTube. One of these days, I will have everything aggregated and I can send it to all the channels at once. But right now, YouTube's kind of the base here. I'm pasting in here a link for the Ultimate Trading Cheat Sheet. So it's a download that you can get over on the website over at trademaestro.com. And it's a PDF that I think it's 4 pages. But it goes through kind of all the key components that I teach through. And then I think it's the last page is the trading checklist. Unbelievably valuable resource. And if you don't like it, then just delete it, obviously. But it's a great resource. I highly encourage you to go click on that and go download that. Okay, so let's get started. Let's do some market analysis. It was a pretty bearish way to end the week. If you can see the chart here, scoot this thing over. We ended Friday down 700 plus points. And that's why you have this big red candlestick here that freaked a bunch of people out. And of course, what do all the media say? Oh, it's the end of the world. And you watch the people, and I hate to just make this political, but a lot of this is political. There's a lot of political bias. When I watch some of the analysts that are out there, I know who they are, a lot of them. A lot of them are my friends. And I know politically where they line up. And the ones that are politically on one side, they think that this is just the end. They're like, oh, this is worse than the last 4 crashes combined. That was a direct quote from one of my friends this morning in something that she published. And then I've got, the other side of it, people aren't freaking out so much. I look at this, if those of you know me, I look at this and I just see market cycles. And as we drop below our support levels, as we break the patterns, we're getting into the next wave of whatever that behavior is. In this case, it's bearish trading behavior. That doesn't mean that we've got a prolonged trend on our hands yet, although we're closer today than we were maybe in the middle of last week. Last week, if you looked at most of my market updates, for the majority of the week, we were anticipating that we would stay inside the channel. And so I laid out several possibilities, but our main goal or main target here was that we would eventually rally up to about 45,000. That is not off the table, But with this big red candle that we had on Friday dropping below our support level, with our stochastics, this is our indicator down here, it's starting to cross to the downside, definitely moved the needle seriously over into the bearish category. And as I zoom out here just a little bit, my first reaction would be our next target would be down here around 40,000 on the Dow Jones Industrial Average. Now, that's a long way from a crash. Okay, some people are freaking out, but that's a long way from a crash. In fact, if you just look back, we were here in August, and that's it. So you're looking at a 6-month blip. Markets are always going through cycles. In fact, it's one of the things we're going to talk about today in our Pick Winning Stocks Challenge is cycles. Why they work, how they work, all that great stuff. So I'm not freaking out yet. I mean, I will never freak out because it's just not, I've been doing it too long. But I'm not, overly scared about the long-term outlook. One thing that has changed substantially from last night, if any of you are my current members and you're in our Sunday night profit picks where we do a little bit more in-depth analysis, one major change is this morning the market gapped down and then it basically traded straight up. Now, I don't know that this changes our bearish forecast. We were pretty bearish last night. I don't know that it changes the forecast for the week. I think what we're going to see here, and this is what I am starting to see playing out, I think what we're going to see is a testing of this pivot area, this purple line here. It's a support and resistance area. I think as we test that, I think you're going to see the bears come back in. I do think probably in the next 2 weeks we'll be down around 40,000. But, we'll update that daily and see where we land. Taking a look over here at the S&P 500, it's a similar picture. You notice the big bearish candle that we had on Friday. We gapped down. We traded bearish for a little bit. Our Stokes is heading down, but at the moment, we're in the middle of trying to make a little bit of a counterattack here and see if the bulls can't get some momentum. Still has not closed that gap. The S&P is down officially 15 points at the moment relative to the close that we had on Friday. And then if you look at the NASDAQ, it's still down 200 points. Now, if you look at the candlestick itself, this tells us a lot. In fact, this is a great jumping off point for our lesson today. You'll notice that our candlestick, we gapped way down here. We traded very bearish initially, but now all that has come back and it's trying to get a little bit of a bullish candle. So you got a green candle, even though the market shows the Dow, which one are we looking at? The NASDAQ shows that we're down 200 points. You got a green candle. You say, well, how can that happen? And this is a great example of when the market is giving us signals, it's giving us indications, but if you don't know how to read them, you stay confused. That's the example of what it is. Let me break that down for you a little bit. It's confusing to most people to say, well, I thought the NASDAQ was down 200 points. Why is it that we've got a green candle? That confuses people. And the reason is because the way candlesticks are constructed. Candlesticks are constructed with an opening price, a low price, a high price, and a closing price for the day. Okay, so this candle, this green candle that you see here, we opened here. At one point, we traded all the way down, and it looked very, very bearish. Well, there you put your low in. Okay, now this was still our opening, and currently, we're looking like this right here. So the bulls are trying to fight back. They're trying to come back, and that's why you see a green candle, because we have a higher close right now. If we were to close at this point, we have a higher close than we had an opening price. But this ticker over here on the right, this end of day, what it's doing is it's telling us today's closing price relative to yesterday, in this case, relative to Friday's closing price, and it's still 200 points to the downside. So these are some of the indications that you'll start to learn as you really learn how to interpret market data, as you really learn how to do your analysis. You'll learn that some of these signals actually have really significant meaning, and most people just completely miss them. And if you're wondering what is the meaning of this, well, it's actually pretty bullish right now. Right now, as we speak, the market is trying to make its way back. It's trying to fight back. Now, can it continue for the rest of the week? I don't think so. I think that you're going to see the NASDAQ continue to fall a little bit here. We're getting close to a target, 16,750. Your next major support level is going to come in around 16,150. And we'll see if anything changes between now and the end of the week. But as of today, as of Monday, what it looks like we're doing, looks like we've got a little bit of a counter move to our bearish moves that we had Thursday and Friday of last week. We're trying to fight back against that a little bit. On the Dow Jones, it looks like it's going to test that pivot point a little bit. But all things considered, I think the momentum is still on the downside, at least for the first few days of the week. And we'll see where we go. Every day we get new data. That's one of the things I love about technical analysis is every day we get new data. And it's not just every day, it's literally minute by minute in the market we get new data so we can keep updating and keep changing our forecast if necessary. All right, folks, that is my big picture market overview. I hope you got something great out of that. If you got any questions on it, type it in here. Thank you, Rebecca. I appreciate that. Thank you, Kenya. Aloha, Rebecca. Are you in Hawaii today? It's great to see you. Anybody else who is here, why don't you type into the chat where you are coming from? That would be fantastic. Would love to know who's here. You know, one of the big differences of doing the live streams, because I do Zooms all the time. I'm always on Zoom. But one of the big differences is I don't know who's here. You know, all I see numbers. And of course, we're on multiple outlets here. Let's see how we're doing over here on Rumble. We still got a few people hanging out with us over there. But you know, I don't know who's here. So unless you type something into the chat. So it looks like Catherine's here. She's coming in from New York City. Hello, Catherine. Welcome to have you here. Happy to have you. Unless you guys type something, I have no idea who's here, which makes it kind of hard for the interaction piece. But all right, let's jump into our main training for today. And this is the Pick Winning Stocks Challenge. If you've never experienced this with me before, it is a 21-day challenge where we're going to go through laying the foundation of all of it. It is an introductory course, but it's not completely beginner. If you've never, ever traded before, then this might be a little bit more on the advanced side. But for those of you who have any exposure to the market, even if you've just been buying mutual funds, or even if you've just been buying ETFs or, fairly small level exposure, if you have any exposure, this is a perfect place for you to launch from. Now, I do call this the Pick Winning Stocks Challenge, but that's because whenever we created it, we did it around the stock market. The truth is everything I teach here, almost everything, 98% of everything I teach in this training is directly relevant to the crypto market, directly applicable to the Forex market, to the futures market. In fact, I use sometimes interchangeable examples and whatnot. So it just, since we already had the Pick Winning Stocks branding, it didn't make any sense to change it to Pick Winning Trades Challenge, and it just doesn't have the same ring. And if I did Pick Winning Crypto, then that'd be a whole different challenge. And so it's Pick Winning Stocks. It is the Pick Winning Stocks Challenge, but the philosophy is the same. And here's our outcome for this 21-day journey. Number one, we want you to learn how to identify trades that win. Identify trades that can win. And more importantly, we want you to know how to play them, how to actually take advantage of those trades, and then most importantly of all, how to lock in the profits while limiting your losses. So if that sounds like some outcomes that's like, hey, this would really help me in my trades, then you have come to the right place, because that's what the Pick Winning Stocks Challenge is all about. Now, this is basically a 3-week challenge. I break it down into 21 days. I call it the 21-day challenge, but inside the 21 days, there's 3 distinct chunks. And week number 1, we're going to get into the timing aspect of the market, timing great trades. I just got into a YouTube war over the weekend. I had posted a shorts about why buy and hold is not a great trading strategy. And of course, some people who are buy and hold enthusiasts decided to take me to task on that. And one of them was so militant. It's amazing how militant YouTube commentators can be. But one of them was just so militant that you can't time the market. Well, guess what? I don't remember who the guy was, but if he's here today, I'm going to teach you how to time the market. Show you exactly how to time great trades. Now, will you get in at the very bottom penny and out at the very, very top tick? Probably not. Most people don't do that. There's an old saying on Wall Street that everybody gets to get out at the top once, and you spend the rest of your life trying to repeat it. And the same goes for buying at the very bottom. Everybody gets to buy the bottom tick once in your life. But that's not reality. And that's not what I'm going to try to teach you. I'm not trying to teach you how to buy at the very, very bottom. What I'm going to teach you how to do is how to identify trades that have a high probability of being explosive, and then how to capture a good percentage of that move. And if you can do that, if you can solve that equation, which is relatively easy to solve, if you can solve that equation and then learn that skill set, you will beat most market participants, number one, you will beat 90% or more of the so-called professionals, and over time you'll start to see your trading account going up. So that's our outcome, and that's what we're going to start with here in week number 1. Let me give a shout out to a few more people here. Jonathan Hartzell's coming in from the Cayman Islands. Let's go, Jonathan. How's the weather down there? It's rainy here today. It's nasty. Mia's coming in from, I think she's out in Washington. Rebecca says her heart's always in Hawaii, even though she lives in Washington State. And Mia's in Calgary. We got 1 billion souls for Jesus. That's Randy in Louisiana. Hello, Randy. And more from Rebecca. So it's great to have y'all here, and thanks for commenting. You know, the more you comment, the more I feel like I'm not talking to the wall. So I love having the comments. It's great. Thank you. All right, let me ask this question. What makes a stock profitable? What makes a stock profitable? When you're answering the question of how to pick a winning trade, it really goes a long way to answer the question of how do I make money trading? I mean, it's nice to know what our outcome is. And so take a look at a couple of examples here. This is a recent trade on NVIDIA. And you say, man, that stock went so high. That was a lot of money. And some of you might be thinking, sheesh, I sure wish I had known. If only I had known, I could have made so much money. And then others of you, you know, you look at a stock like Lulu and you say, oh, that's a turd. That thing just dropped like a rocket. Boy, I'm glad I escaped that one. But the reality is your observation of the moves actually don't define the profit or the not profit. This trade on Lulu was an equally great opportunity as the trade on NVIDIA. Both of these stocks, both of these charts had a ton of money. In fact, had you known at the beginning of the trend exactly how far it was going to go, and had you executed certain strategies on either of these trades, all of you could have retired on them. Now, we never know exactly what's going to happen, so few of us will take that level of risk, but that's how much money and how much opportunity was in both of these trades. You say, how? And here's the key. The key on the NVIDIA trade is that you learn how to buy low in the trade and sell high. Now, that sounds very elementary because it is. The basics of making money in any trade is to buy low at one price and sell high at another price. Now, why would I go to something so elementary? Well, it's like that old story of the preacher who continued to preach the same sermon over and over every week. And the first week, you know, all the church members were excited about it. And they said, this is fantastic, Pastor. The second week, you know, they were kind of like, well, that was just as good as last week. But after about 4 or 5 weeks of it, people started complaining. And one of the elders pulled the pastor aside and he says, hey, it's a great message, but when are you going to change it up? And he says, I'll change it up whenever you guys start doing it. When you guys start executing and living the message, I'll change the message. And that's how I feel about buy low, sell high. When people lock in that this is how the market operates, I'll stop teaching the basics. But until we lock in, the way I make money is to buy low at one price and sell high at another price. Until we lock that in, we have to keep coming back to basics because every argument in the profit generating formula comes down to this philosophy that I've got to buy low and sell high. Now, there's a flip of this, and let's look at the Lulu trade. And if you look at this Lulu trade, you say, well, I can't buy low and sell high. And you say, I would say to you, well, that's not true. You can. It's just that we have to flip it. Well, I want to buy low, but before I can buy low, we have to sell high first. And the name of that strategy is a short trade. So the way you could make money with this Lulu trade is to identify what's going on, short the trade, we sell it first, we bring the money in, and then we buy it back at a lower price. It's the exact same trade. It's just that we flip the order in which we do it. This is the foundation of all trades. And it doesn't matter if you're trading stocks or Forex or futures or crypto or anything else. This is the foundation of everything. And here's what I want you to know right here at the beginning of this Pick Winning Stocks Challenge. Picking a winning stock is not about finding the next stock that's about to have an explosive growth. Let that sink in. Like, make your note, take a screenshot, whatever it takes. Lock in that first sentence. Picking a winning stock, or trade that out, picking a winning trade, picking a winning crypto, picking a winning Forex is not about finding the next trade that's about to have explosive growth. It's about identifying opportunities and executing an appropriate trade for that opportunity. Now, if you sit with what I just said, what I just shared, and you really comprehend it, you'll realize that this philosophy completely flies in the face of what most people do. Most people are trying to find the hot stock. Most people are trying to buy and hold. Most people are trying to figure out, if all this business operation is happening, what should this company be worth in the future? And none of that is going to make you money. The way you make money is what's on this screen right here. It's not about finding explosive opportunities. It's about identifying the opportunities and executing an appropriate strategy for it. So I tell people we got to drop the story. We got to drop the story that trading and making money is about the numbers. It's not. We got to drop the story that we're going to look at the long-term predictability. Buy and hold. If you just buy it and leave it and come back in 20 years, it's going to be better. That is not a true statement. And I can show you the statistics. S&P has published them for 30 years. It is not the reality. You got to drop the story. I'm going to trust the professionals. They know more than me. That is not true. That is a lie. Once again, S&P has studied these statistics, has published these statistics for years. I don't think I do it in this slideshow, but I've done it in a million others. Over 90% of professional traders cannot match or beat the S&P 500 over a 20-year period of time. You can't just trust the professionals. The longer you trust them, the worse their results get. So no, we got to drop the story that I can't do it. I got to trust the professional. The reality is you can do it. You absolutely can. We got to drop the story that trading is just gambling. It's not gambling. No, it's not. Timing the market is not gambling. The people that have dropped these crazy narratives into society have done a huge disservice because they've taught people that, you can't do it. It's just random. The market is rigged. It's working against you. And that is not the reality. Is there some manipulation? Sure. There absolutely is manipulation in the market. Are there people who have an unfair advantage at times? Sure. Is it just gambling? No. Does it mean that you can't make money? No. Does it mean that you can just trust the professionals? No. Does it mean I should just buy and hold and see what happens? No. Just because there's unfair things that happen in the market doesn't mean that you're a victim of it. The reality is, don't wish it was easier, as my old friend Jim Rohn used to say, wish you were better. Learn the skill. Get better. And when you learn the skills, what you will discover over time is all of these stories, all these narratives that I put up on the screen, turns out they were all a false narrative. They were all excuses for people who couldn't figure out how to cover up their ineptitude. That's the reality. It's a human behavior. One of the big things we talk about in trading is we talk about human behavior. We talk about the psychology of trading. And I never imagined I would learn so much about human psychology, certainly not from trading. But one of the things I have learned on this journey, human beings, we have an unbelievable reaction when we do something that is not what we want. We make excuses. And typically we frame those excuses in either our inability to do something, therefore we're going to trust somebody else because we can blame them, or we're victims. And by the way, if you look at all these stories, every one of these narratives sets you up to be a victim as opposed to being a victor. I want to give you the tools. I'm going to give you the tools to beat the market, give you the tools to not be a victim of the market. So let's take an example here. Let's look at this trade on NVIDIA. I want to ask the question, how can you explain this? How can you explain that NVIDIA went up 10 times in a year and a half, however much it was? Is there something about their sales that drove it? Was there something about their leadership that drove it? Was it they just happened to be in the right place at the right time? And how could we have possibly predicted this move? And I'm going to give you an answer. Many of you are probably thinking, let's see if anybody says in here. Nobody's really responding to that question, but that's fine. Well, you may be responding. There's always a delay in the stream, so it's hard to say. But how could you explain this? How could you have predicted this move? And the answer is you can't. The answer is you cannot explain it. You cannot explain why NVIDIA traded as high as it did, as quickly as it has done. You cannot explain it from the numbers. You cannot explain it from the revenue. There's nothing in their fundamental data that suggests it, which would only leave you with, oh, they just happened to be in the right market at the right time. It was random. No, it's not. It's not. Now, some of you who are big fans of NVIDIA, you might be thinking, oh, well, we knew it was going to happen. Good for you. Some of you were saying, oh, well, I work in AI. We knew that NVIDIA was the only player in town. It had to happen. But if you look at the numbers, and I'm not going to do the hardcore fundamental numbers on this today. If you look at the numbers of NVIDIA, you realize that NVIDIA's numbers do not match in any capacity what this chart shows. This stock as a whole is so overvalued. They would have to maintain their current profit margin at the current level, which is unsustainable, by the way. But they would have to maintain their current profit margin at the current level for 100 years to ever break even on a market capitalization that currently is reflected. It is absurd how expensive and how overvalued NVIDIA is. Does that mean we don't trade it? No. It means that we stop trying to put numbers to it. It means we stop trying to explain it, because you'll never explain it. I can go through stock after stock, example after example, where the numbers do not match and they will never match and they never make sense. And if you tried to trade the numbers, old school style, you'll never make money. But we can't do that. All we can do is trade the momentum. And here's a statement I want you to write down if you've never heard it before. Make it part of your ethos. The market can stay irrational a lot longer than you can stay solvent. The market can stay irrational a lot longer than you can stay solvent. The sooner that we accept this reality, we free ourselves. We free ourselves from trying to figure it out, because you'll never figure it out. It's an endless game. See, what happens is the naive person, the naive trader who's coming into the market, they say, well, I understand if I were to go down the street and, buy a local salon from a local, hairstylist. If I went in there, I would go in, I'd look at the numbers, I'd say, this is how many customers you have, this is what the value of the company should be, and this is what I'm willing to pay for. That makes sense. It makes sense on a small local business level. But when you have millions of market participants that are driving a price up, and you're trading at an exponentially higher level than the trade should be worth and the company should be worth, and the value keeps going higher and higher, you can't explain it. So there's only two reactions. One is, well, we'll take a risk and we'll short it, and then you end up losing everything. Or you say, well, it just doesn't make any sense, and you just don't trade it and you miss out. Neither one of those help you. Once you understand markets are irrational, once you understand that markets can stay irrational longer than you can ever stay solvent, you free yourself from this endless challenge of, how can I solve for this equation? Because guess what? You're never going to solve it. Here's the truth. Here's the truth about markets. And I'm realizing as I'm teaching here that one of my dogs got locked in the office and he's walking around behind me. So if you see him, I think you may have just seen his tail cross behind. What's the truth about markets here? Here's the truth about markets. Markets are not efficient. Markets are not efficient. Now, that's not normal everyday street language for the markets. It is if you know markets, but most of you, if you've never traded, you don't know what that means. There is a theory of trading that came out in the 1940s. It's a theory that people like Warren Buffett and many of the greats have held on to religiously for all these years, for really all the 20th century. It was published in a book called The Intelligent Investor by Benjamin Graham. And what the theory says is if a stock is trading for less than it should be worth, then it will come back to its fair market value. And if a stock is trading for more than it should be worth, it will come down to its fair market value, because the markets are efficient. It's BS. I'm not saying that it wasn't true in 1940, but as the markets have changed over the last 100 years, almost 100 years, many dynamics have changed. We're no longer on a gold standard. That changes everything. You know, in 1940, when Benjamin Graham wrote that, the basis of the market value, which was the US dollar, was fixed to a fixed value called gold. We're no longer there. So we live in a fiat currency economy that throws everything up in the air in terms of valuations. You know, you look at the house that I'm in. According to Zillow, this house is worth exactly 3 times what I paid for it 10 years ago. But I've lived in it for 10 years, and we've got 3 kids and 3 dogs, and they've torn up everything, and this house needs to be painted, and we need to replace some floors. And I can guarantee you that this house is not in as good a shape today, 10 years later, as it was 10 years ago. It's not worth 3 times in my mind. But according to the market, it is. And somebody would probably pay that. Last week, I did a live stream and we talked about what's the value of a stock. And I said that the value of anything is what people are willing to pay for. It's basic economics. You say, why would somebody pay 3 times what the house was worth 10 years later? And the reason is not because the house became worth more. It's because the value of our currency has become worth that much less. So when you look at stocks, when you look at companies and you say, what's the value of this? The very premise of 1940 valuations are totally different because we had a different currency. We had an asset-backed currency. Today we have a fiat currency. Now, if that changes, maybe some of the valuations will change. But as we sit today in 2025, when I'm teaching this, we live with a fiat currency and valuations are constantly changing. Another thing that has changed is the accessibility to information. You know, in 1940, if you wanted information, you had to wait till the paper was published and people got it in the morning, and there may have been some new news wires, but most people didn't have access to that. Today, we've got access to instant information. As fast as you can snap your fingers, you can get data all around the world. Something can happen in Japan, and we've already found out about it 3 minutes later in the United States. So the speed with which we get information, the speed with which it gets factored in, and then just the sheer number of market participants who are uneducated. You say, well, why am I knocking the uneducated market participants? I'm not. I'm just saying that in order for a valuation to actually hold, all of the participants have to have the same data and be saying, I'm willing to pay this price with the same data. When you have a bunch of uneducated participants in the market, people that don't really know what a value should be, they will continue to pay more and continue to pay more and continue to pay more, even though it's not actually worth it. And that's what drives the prices up. Is it irrational? Absolutely. But it doesn't matter. It doesn't matter. The truth about markets is markets are not efficient. They're not even kind of efficient. The truth about markets is they are not a mathematical equation. They are not driven by the fundamental numbers, as people would suggest. And most importantly, markets are absolutely not random. They are not random. You say, well, what are they? Markets are incredibly predictable when you understand what's happening. But the reality is most people don't know what's happening, including the professionals. The so-called professionals are not that good. 93%, according to one version of the study, every year the stats change slightly. So 93% of professionals miss their S&P benchmarks over a 20-year period of time. This is just the truth about the markets. Here's also the truth. The non-professional trader can consistently outperform the so-called professional year after year. But the way they do it is by divorcing themselves from the old game. And I said divorce. I should have said dissociate. It's a better term. Dissociating from the old story, the old game of I've got to know what the future value should be. We're going to base it on all these numbers. We're going to estimate. No, we got to dissociate from that and play a different game, a better game. Warren Buffett himself said, you will not beat me at my game, but you can beat me You just have to have a different game. And that's what we do. What we do is we come in with a different game. You say, well, what's the game? Well, let me share some truths that you need to discover if you want to beat the market. Number one, you need to understand that markets are not random. Markets are driven by human beings. And human beings are the buyers and the sellers. And human beings are driven by one thing, whether they want to admit it or not. Men in particular will not admit this. But as market participants, human beings are driven by emotion. The sooner that you will adopt that philosophy and understand it and internalize it and make it part of who you are, the sooner you can really make money trading. Because again, we're dissociating from the narrative that has controlled the way people approach the market. The second piece that you need to understand, the second truth, markets move in cycles. Markets move in cycles. And the sooner that you can understand that emotions and cycles are the real driving factor of the market, the sooner you can get out of the market matrix, if you will, and come back in and see it like Neo. Remember the movie The Matrix where Neo just saw all the numbers going everywhere? So, let me introduce you to this. I'll give you an introduction into market cycles. This will be kind of a brief introduction, and then we'll pick up on this tomorrow as we start talking about timing our trades. You need to know there are three phases of a market cycle. The three phases are the accumulation phase, the public participation phase, and the distribution phase. Accumulation, public participation, and distribution. These three phases happen all the time. They are not driven by fundamentals. They're not driven by numbers. They're not driven by estimated values. They're not driven by mathematics. They're driven by one thing: human emotion. And specifically inside that human emotion, or the container, I should say, of the market cycles, how those emotions play out with market cycles. So let me give you a visual. An accumulation period is going to happen at the bottom of the market. During this time period, what we refer to as the informed traders start accumulating positions. Now you have to realize before we got to the bottom, what happened? We were probably falling. So it's in the middle of a bearish market. At an accumulation phase, the news media is very, very bearish. They're telling you how bad it is. During an accumulation phase, the majority of market participants have already sold everything and they're sitting there feeling beat up. During an accumulation phase, it appears contrarian sometimes to be buying. And yet, during an accumulation phase, there's a group of traders who are looking at it, and through various means, maybe it is fundamental data, maybe it's technical data, maybe it's their observations of just simply looking at the price action, maybe it's insider trading. It doesn't matter what their source is. Through various means and sources, you have a group of traders who are informed about this trade, and they start to accumulate new positions. And as they accumulate, they bring it in, they start buying, they start taking it up, filling up their accounts with their new trades. And eventually, because there's more buying pressure now, the price starts to rise. And as it starts to rise one by one, some of the people that were out there, just the random traders, the public as we refer to them, start to recognize and they start to take note and they start to jump in and the buying pressure builds. And before you know it, we have a new trend. And we call this trend the public participation phase of the market. Now, here's what you need to know about public participation. The informed traders, they do know typically the price point that they're going to buy, but they are not big enough. They are not strong enough. They do not have enough buying power to manipulate the market. Not this way. What the informed traders can do is, because they start buying at a certain price point, which I'm going to teach you how to identify, but because they start buying at a certain price point, they define where the boundaries are of the market, but they can't move it from boundary to boundary. It requires the public. The public is the energy, it's the fuel that drives a price from point A to point B. The informed traders, with their accumulation, they stopped the panic. They stopped the crash. They started accumulating their positions and they started all this buying pressure, but it's the public, the unassuming public, by the way. They often don't even realize what they're doing. It's the public participation that drives the price from point A to point B. You say, what happens at point B? At point B, we get into another phase that we call the distribution phase. And in the distribution phase, this is where the hype is the greatest. This is when the news media says, oh, there can be nothing that goes wrong. Everything is great. Everything is wonderful. Look how high it is. It's NVIDIA right now. The news hype, the news media around NVIDIA is incredible, right? Now, maybe not most recently, but in not too recent past. Oh, how high can it go? Can we go up another 10 times? Because when you're in the middle of a bubble, when you're in the middle of a cycle like this, the news media, as you'll hear me say over and over again, they don't actually define the market very well at all. They're always reacting to what they see. This is Bitcoin when it crosses over 100,000 and it starts selling and people start panicking. They say, why is it selling? We just broke out of 100,000. I thought we were going to 10 million. And the news media is all excited. Oh, Bitcoin will come back. This is a dip opportunity. We'll buy the dip. And then suddenly it just starts falling. People can't figure out why. Because we weren't really in a trend at that point. We were in a distribution period. And what happens in a distribution period is the very people who started the move, the very informed traders who recognize the valuation at the bottom, recognize the opportunity, and they started accumulating positions. At the very top, those very same informed traders start distributing their positions. They start selling. They start letting all of their profits come flowing in the form of cash because they're making money. Now, some people might say, oh, you don't know that. The best traders just buy and hold forever. No. By the very explanation of this pattern, I explained to you that the informed traders are not buying and holding forever. Informed traders buy in an accumulation or as soon as the accumulation breaks out into the beginning of the public participation phase. And informed traders are selling during a distribution because informed traders do not buy and hold forever. Informed traders take their profits. And they take their profits relatively frequently. The people who are buying at the top, you say, who are they selling to? They're selling to the uninformed public, the naive public, the public that didn't even pay attention to the fact that the price just went up twice or 10 times or 100 times, whatever it was. They're selling to the uninformed public who finally realized the hype. Oh, look at this. Oh, it's a hot stock. It's gone up 10 times in the last month. Let's buy it. And then they wonder why they're buying, and as soon as they buy, it goes down. And as soon as they sell, it goes up, because the uninformed public is always on the wrong side of the trade. It's what I want you to learn to not be. I want you to learn to be the informed public. I want you to learn to get in as soon as the accumulation confirms and breaks out at the beginning of the public participation phase. And I want you to learn how to recognize the targets so you can get out at the beginning of the distribution phase. And if you can capture that part of the trend, you're going to be able to make more profits than you ever imagined trading. You say, what happens after distribution? One of two things. One of two things happens after a distribution. One possibility is that you have a reaccumulation. And the distribution just simply becomes a consolidation that breaks out and eventually continues as a bullish trend. The second, more common direction that will happen is once the distribution shakes out, once all the informed traders have liquidated their positions and there's no new money flowing in from the uninformed public, guess what happens? The price starts to drop, and the very uninformed public that bought at the top drives the panic buying as we're in a new bearish public participation phase that drives us right back down to the bottom, where guess who shows up? The informed traders, the very ones who started the first accumulation, the very ones who were selling at the top. The informed traders say to those poor uninformed public participants, you're upside down? I'm sorry, Sonny. Here, let me take that off your hands. I'm feeling like accumulating today. And if you can understand that cycle, we've gone through a lot of things today. I said, if you can understand this, if you can understand that cycle, you will comprehend the core function of what's really happening in the market. The core function is not analyzing what the price of the stock should be worth, not analyzing what the numbers suggest, the fundamental data. It's not analyzing the product. It's not analyzing the earnings results. It's not all of that stuff. The core aspect of the market is to understand that we're driven by emotions and we move in cycles. And if you can understand those two things, you're going to be so far ahead, because now you dissociate from that old school philosophy of fundamental analysis, and instead you say, okay, well, how can I learn this? How can I analyze, learn to recognize market cycles? How do I learn to analyze human behavior? And when you start to analyze the actual cause of price movement in the market, as opposed to the theoretical cause, which is numbers, and you start to actually analyze the price action, you're going to have an edge. You're going to have a huge edge, because now, like I say, it's like Neo in the Matrix, where you see all the things. It's like you're dissociated from it. It's no longer guessing. It's no longer, well, what news report's going to come out and mess me up? Well, what fundamental data might come out? What earnings is going to mess me up? What CEO is going to sleep with a secretary and create a scandal? It doesn't matter anymore, because you're recognizing the actual driving force of the market, which is human behavior and human emotion. The only way to do that is through your technical analysis. Let me break this down one last way here, show you a couple more examples. And what I want to do as we wrap this up, I'm going to actually get rid of everything on my charts, and I'm just going to show you how this happens. And you can see it on indices. Actually, I'll do it right now. This is on the NASDAQ. You can see it very clear, the accumulation period that happened down here. And then there's your public participation trend. Now, we'll deal more with the ebbs and flows in future lessons. But then what happened up here at the top? There's your distribution. So public participation is the trend. Your accumulation happens at the bottom. And the question is that we're trying to answer right now, and I think we've got the answer after last week, is this a new bearish public participation? And right now, the evidence would suggest that's exactly what it's shaping up to be. Let me show you some stocks, and actually, let's do some crypto as well. I'll show you Bitcoin. Based on what you learned today, how many of you think you can see a pattern in Bitcoin? Just based on cycles that you learned today. Does that look like some accumulation? Does that look like public participation? Does that look like some distribution? Bitcoin's not crazy. It's not irrational. It's actually moving through market patterns that reflect assets that are driven by human emotion. The problem is when you try to calculate it. You cannot put a formula to human emotion. You can't put a formula where the formula doesn't plug in. You got to recognize the pattern. Let me go a little bit earlier in this trend. And here's the whole trend. So here was the previous bearish market. Here's the accumulation at the very beginning of the trend when Bitcoin was 20,000. There's your public participation. Here's your breakout. We tested it. Public participation. Here was your distribution that turned into a reaccumulation, new public participation, distribution at the top. Do you see it now? Let's go on down the list. How about XRP? This one's all over the internet, right? Look, for years we've been accumulating public participation. Now we've got everybody in a panic. Oh no, what's happening? It was $3.20, now it's only $2. It lost half its value. Or it's just irrationally volatile because it's got so much irrational public participation in it. But this is a distribution. Don't think it's anything else. Now, it has held, from a support standpoint, it's held around $2, and it easily could rally from here. But you notice we were able to trade this because I started buying. I bought my very first XRP at 17 cents. And back here last fall, people who were around long enough remember, I was telling people to buy in the 30s and in the 40s. And after we were over 50 cents. And then when we were over here breaking $3, I'm telling people, no, we're overvalued. Like this thing's going down. I'm not saying it's crashing. I'm saying that this is a good place to take your profits. How did I know that? I certainly didn't learn it from X. Because if you listen to X or if you listen to the XRP people all over YouTube or everywhere else, they're telling you that XRP is going to the moon. And I know people, some of you are some of those people who have held XRP for years. And this was an extraordinary trade, folks. Lock it in. Don't assume I'm going to buy stuff for 40 cents and sell it for $400. That is a rare exception. Rare. In fact, it's never happened to me. But trades like this, where you buy it for 35 or 40 cents and you sell it for $2.50 or $3 or even $4, and you take your profit and you pull it out and you wait for it to give you a new buy signal and you jump back in, you do it again. This is bread and butter trades right here. This is how you're going to beat the market. And I can go through trade after trade. I did a couple cryptos. Let's look at, let's see what Apple looks like here. You're going to see it on stock after stock after stock because every trade goes through these cycles. A cycle of some sort of a consolidation, which started as a distribution, turned into a reaccumulation, public participation, small distribution period, new. These are the bigger patterns called a consolidation. But there's your accumulation right there. Here's your public participation. And we've basically been distributing up here for several weeks, several months actually. Okay, let's go over to NVIDIA, the example we were using. I zoomed in. I cheated. I zoomed in so you couldn't see where it went. Started way back here, driven by the public. We've had a few distribution moments. This was the biggie right here. And now what are we starting to see? We are flirting with a major bearish public participation. It is highly probable, don't be surprised if we see NVIDIA look like a crash. I'm not saying it's crashing. I'm saying it will look like a crash over the next several coming months, weeks or months, as it really just comes back into a balance. I wouldn't be surprised if you saw NVIDIA back down here at $45. People will call it a crash because it was 60% of the value. But that's because people don't understand where value comes from. The price of your trade is not tied to what the company's doing. It's tied to what the people who are trading it think it's worth, or they think it might be worth in the future. It's emotion, it's speculation. And the sooner you learn how to trade that, the sooner you can profit from it. Let's take one last example here. Let's see what's happened with Tesla. So with Tesla, you can see it all over the place. It's just so obvious. So obvious. Here was the most recent big public participation. We accumulated down here. Took a little bit to get going. There was your public participation. Here was the peak. What drove it right back down? More public participation. Now, what does the media tell you? The media will tell you, oh, it's social movements against Elon Musk because they hate Doge. It's because they hate Trump. It's because they hate all the stuff that's going on. So people are protesting. No. The media never knows what's going on. The media is always following the news. They think they write the news, but what they're really doing is reacting. If you want to be a successful trader, you want to be a profitable trader, what you're going to have to learn how to do is dissociate from the old school philosophy and learn to recognize what's really happening. Learn to do this analysis, which I'm going to be teaching you this week and next week and the following week. And then you'll be free. Now you're independent. Now you can come in, you can analyze the market yourself, and you can learn to recognize when public participation is happening, jump in early, get out at your targets, take your profits, turn around, wash, rinse, and repeat. That, ladies and gentlemen, is the introduction to market cycles. Now you have a clue what's happening, and that sets the stage for the rest of the week of our Pick Winning Stocks Challenge. So let's see what comments. We got a lot of comments that have come in here. I don't have a way to share them on the screen, so I'm just going to have to read them to you. Thank you. Appreciate that. Thank you, Jonathan. Says no truer words have ever been spoken. I don't know what I said, but I agree, Jonathan. It was the truth. Kenya says we can't see the dog. Well, he went into a corner. Thank you, Rebecca. She likes the examples. Chad Riley. How are you doing, Chad? He says, what about the people on X talking about explosions in the market? I think I kind of addressed that. It's all hype. It's really hype. It's all hype. That's all there is to it. Now, there is, in crypto especially right now, there's a major movement of what we call pump and dump, where you have people that are just building hype and they're pumping up the price. The irony is those very people who are sitting here pushing it to the moon, and they're pumping up the values, they're actually, I'll call them the informed traders. They're the ones who got in, bought, they go, maybe not themselves, or they might have a network of people who have a lot of influence, but they'll go push out the pump to millions of people, get people buying it, and as the price comes back up, they're the ones that are actually selling. So the pump and dump instigators, which is a lot of what you see on social media, they are not doing what they say. They are pumping and dumping. They're pumping up the price, they dump it, drive the price back down, buy it cheap, pump it back up, wash, rinse, repeat. And that is it is a form of market manipulation. It's happened for years. It used to be primarily in the penny stock world, but since there's really no regulation in crypto for that kind of stuff, it's happened a lot with crypto. That's what you see with the meme coins. When you see meme coins that go up 100 times, and it looks like and feels like people are making all this money, but the truth is most of it's just pump and dump. And the people who are driving the price up are they got in early, and they're selling on the way up to the people who are getting trapped. So that's the answer to that. Oh, thank you. I appreciate it. He says, thanks, brother, for the insight. You're welcome, brother. He says, I can listen to you all day. Well, thank you, Chad. Hope you're doing fantastic wherever you are. The coast of the Bering Sea. Doing whatever you're doing. All right, folks, thank you for being here. We went a full hour today. I'm not sure every day will be this long. Some days will be shorter. Some days will be longer. My goal in the end is for our live streams to be about an hour with a little market update, little teaching, and some application and some Q&A. As I go through some, kind of predefined courses such as the Pick Winning Stocks Challenge, some of those may go a little bit longer, but feel free to, pause, come back, rewind, watch it. And of course, if you want to have access to all the recordings, they're always available in our membership area over at Trade Maestro. I want to give you, see if I can paste it in here. If you haven't downloaded the Ultimate Trading Cheat Sheet, which I just pasted in, feel free to click on that and go download that, and we'll send you an email with a link to it. It'll immediately give you access to it. And, if you don't like it for whatever reason, then you don't have to keep it on your computer, but you definitely should take a look at it, because it's really just a very high level overview of all the stuff that I teach. If you've not liked and subscribed to the channel, please do so. Like and subscribe. I want to welcome and say thank you to those of you who joined us over on Rumble. Anybody that's over there on Facebook, thank you for being there as well. We will be back live tomorrow, same time, same place, 1 o'clock Eastern time, noon Central time, which is where I'm at. That's God's time zone. 11 o'clock if you're over in the mountains, and if you're on the West Coast, we'll be here at 10 o'clock tomorrow. Thank you for being here. Come back tomorrow, ready to ask questions, ready to take notes, and until then, I wish you the best. Happy trading to all of you. We'll talk to you soon.